What's going on, everyone? My name is Jeff, and Roku stock started off the week trading around the $73 mark, getting up as high as $74, guys. And then right here on Tuesday, going into Wednesday, they got a big downgrade. I guess some people would call it a big downgrade. I don't think it's a big downgrade in my opinion. And essentially the stock tanked off about 10% after that. But it got traded all the way down to around $60 and has since recovered. And actually took a 1.57% gain today, and has even ticked up another 7 cents in after hours. So guys, I just want to talk about this. Roku is a stock we've covered a lot here on this channel. Of course, I made a buy alert on Roku at $30 back in the 3 stocks to buy video in January, and it has performed extremely well. You know, I guess you'd say if you did buy at the $30 mark, you would have well over a 100% return right now. And of course, I made one swing trade from $30 to about $33, and I also built a long-term position in my Roth IRA M1 Finance portfolio. Now, I'm currently up about 81% on that position. Okay, and so it was actually Loop Capital that came out and made the downgrade on Roku, and they actually come out with this on the 13th of March. And so Loop Capital Markets' Alan Gould downgraded Roku from hold to sell with an unchanged $45 price target. Now let's stop right there, guys. We are not even fully recovered in the stock market yet. You know, we still have about 1,000 points on the Dow before we'll be back to those all-time highs we made back in September and October, right before the market dipped really hard. And so even with about 1,000 points from reaching those highs, you know, Roku is already well over $45 a share. So I find this analysis just a little bit on the ridiculous side. Basically, what they're saying with this analysis is to short Roku and short it all the way down to $45 a share. I do not think that's going to happen, but I do recognize the importance of these upgrades and downgrades. They do have a direct effect on the stock price. That's why I always think it's very important to talk about them. And so Gould went on to say that while Roku is able to show some of the best unit and revenue growth metrics across the entire high growth internet and media sector, it will face substantial potential competition within the video streaming space. Now guys, I talked about this back in my stock analysis video, where of course, you know, Roku's biggest competition is coming from the largest companies in the world. So their main competitors are Apple, Google, and Amazon. That is some very, very stiff competition. But Roku is still a very small market cap company with a lot of room to run and also a very high level of dominance in the streaming space. So would your dollar be better spent on Roku, or would you rather have money into those big tech companies? Guys, I want you invested into all the companies I just mentioned, but I do not find this analysis any justification to sell the stock, simply because on their last earnings report, guys, they absolutely killed it, and the forward guidance was huge, and the 2019 revenue forecast was absolutely outstanding. You know, if we start seeing a change in the revenue forecast, it might be time to back up and try to trade out of this stock. All this talk about Roku trading at massive valuation points, I think it is just hot air. I don't think there's anything that they can really put behind this, simply because of Roku's dominance. He also mentioned in the report that there was an increase in insider selling activity. Now guys, I think that is due to the 100% gain since January. And I'll go as far as saying this: if you bought into Roku at $30, like let's say you bought 100 shares of Roku at $30, I would probably go and take half of my position off the table here. I would probably sell 50 shares and allocate those funds to other stocks, but I definitely want those 50 shares, and I would just hold that as a long-term position, because you're basically, when you cut your position in half, you're writing free shares at that point. And just keep in mind, even if you are a big executive in a company, or you're a CEO, or whatever your position is with a company, guess what? We all like to make money, and we all like to lock in profits. So just keep that in mind. You know, that insider selling is strictly due to people wanting to lock in profits and probably spread some of that money out and invest it more broadly across the stock market. And there was a few changes since the earnings report that I do want to mention. Like I said, if you haven't watched my first stock analysis video, make sure to go back and do that. I will have a link come up now if you would like to go watch that. But as far as their management effectiveness and their return on equity actually improved to a negative 4.46%. And guys, back when I made the video, it was actually around a negative 7%. They also increased in quarterly revenue growth, where it was at 39% is now over 46%. That is also very, very bullish for Roku. And then of course the balance sheet. This is the best part of Roku stock right here, guys. They increased their total cash to $197 million. And of course they are still completely debt free. And again, guys, that just reminds me on seeing that once again, you know, how can you not have Roku in your portfolio? On some level, this is a company with a small market cap, massive growth potential, and no recordable debt. In my opinion, Roku is a must own stock. And so how did I play this position this week, guys? Well, my portfolio did not really see any action in Roku. When we started getting this big 10 and I seen an 11, 12, 13% dip here. So what I did, I set a limit order to buy more Roku at $55. And that price just simply was not met, and that actually expired this afternoon. So I didn't sell any shares, and unfortunately the price didn't get down low enough for me to buy anymore. So always just kind of keep that technique in mind. When you see one of your favorite stocks kind of in free fall mode and you don't want to sell, you want to stay in that stock, queue up a number in your mind. Say, hey, I'm willing today to pay $57 a share. I'm willing to pay $54 a share, whatever it is. And then go in there, you know, set a limit order. And if your price is met, then great. You now own more Roku at a good price. But again, keep in mind, if your price is not met, that limit order will just expire and all that money is back in your brokerage account for you to keep spending on something else. But anyways, guys, that's all I got for the video. Still very bullish on Roku, and I still call this stock a buy. Make sure to drop a comment. Tell me your opinion on Roku stock and how are you trading it currently. Be sure to drop a like, guys, and as always, have a great day.